What is going on, ladies and gentlemen? This is day number 4 of our boot camp. This is day number 3 of our chart markup. So just want to go ahead and reiterate what this is. Don't mind the hoodie. It's hoodie season. I don't know what it is. I'm just feeling, I'm in the vibes. I'm in the flow. Things are really going good in my life. So a lot of good things going on. I'm really excited to educate today. So let's just review everything that we got up to this point, and then we can go ahead and dive right into the education. So day 1, we talked about setting up a brokerage account. Day number 2, we talked about the basics of trading view. Day number 3, which was yesterday, right? Day number 3, we talked about, okay, how do we get into marking off, higher highs and higher lows? And then yesterday, we dove into when it comes to support and resistance and teaching ourselves how do we, handle support and resistance. And today, we're going to get a little bit deeper into it. We're going to get more deeper into it when it comes to entries and exits. I will be talking about a couple setups that I took today when it came to gold. Like I said, I've been using gold as my favorite pair. So we're going to dive into the entry and exit techniques. Now, like I said before, there's a lot of different ways to get in and out of the market. Like, trust me, there's a lot of different ways to get in the market. I am just here to give you guys some basic tool sets to not only set you up foundationally. So now when you guys are learning strategies more and more, you have yourself a good foundational base of where you can start. Right? Because a lot of times with strategies, it's a lot of psychology, it's a lot of mastery when it comes to it. But for a lot of us right now, we're trying to get it back. We're trying to get some kind of return. So with this technique right here has actually gotten me a lot of returns. Now, was it perfect? Was it the sniper entry that you see on Twitter? Is it the sniper stuff that you see on social media? No, it wasn't all of that. But what it did is it gave me a sense of confidence that, okay, this trading thing could work. All right. So that's what this is all about. So today we're going to talk about proper risk management, and we're going to be really diving into like proper risk management, buys versus sells, right? So we're going to be diving into those things as well today. So let's go ahead and get my trading view pulled up here for today, and let's dive into gold just for specifically, and let's dive right into it. All right. And I hope you guys have been enjoying the value so far. You guys don't mind, comment. Hope you guys have been enjoying the value. Hope you guys been really enjoying the education. I hope this has been helping somebody. Hope this gives somebody some faith that this could be something that they could do, right? Hope that I've been explaining things in a manner that you have been able to receive the information. Because one thing about this whole thing, and it's so funny, right? Remember yesterday we talked about, oh, what could gold possibly do? Well, ladies and gentlemen, here you go, right? What could gold possibly do? We drew all these different examples yet utilizing support and resistance. And would you look at that? All right, let's get rid of a couple of these lines here. Let's see what lines we got rid of. Let's get rid of these couple of these lines. All right. Do you guys see what I'm talking about, right? When you guys have yourself an opportunity for higher probable setups, marking off support and resistance, notice what happened off of here, right? Market came down to this level of support, closed, and then it rejected, closed above it, and then now we had a buy opportunity here, which this could have caught you an easy 200 pips if you played it right. Now, like, that's literally how powerful knowing and having the confidence to be able to mark off support and resistance. Is it perfect? No. Is it always going to be perfect? No, that's not the case. But it trains your eyes to give yourself a higher probable chance. Okay? So today, let's actually talk about entries and exits. Like, what do we do now? Okay. All right, Aaron, we've marked off support and resistance. What do we actually do to find a way or to give us an opportunity to make money in the market? Okay, so let's talk about one of the setups that I have for today that I took, which was a gold sell. So I had the 1 hour chart marked up here, and I was actually looking at this level of resistance that was sitting right here with these candlesticks, right? Very easy rejection at this level when it came with price pulled up to here. Now, just like I talked to you guys before, I want to show you guys what it means calling breaks and retests. So when you guys drop down to the lower time frame, you guys notice about gold, you guys can see that the market itself was actually playing around at a level of support and resistance that many of us probably not have seen. So notice how these wicks that were happening in the previous time frame, right, in the 15-minute, you guys can see that the length of these wicks were coming down to at least, it looks like, a range of price, Now, was it all accurate? No, but notice how the market was reacting to some kind of range. Now, so for me as a trader, I said, okay, it looks like the market has rejected off of these levels before. So I would take this level and I would kind of adjust it, right? I can go, okay, it looks like the market has been here before, right? Just utilizing your techniques from earlier Zooms, right? Where we talked about support and resistance, everything like that. Notice how the market came to this zone before, rejected, it broke through it, it retested it and continued to buy. It came to this level and tested it before, went back up, it broke through it. And so now this is a technique that you guys can utilize in your trading called breaks and retests. So anytime that there is a floor or area of support or resistance that gets broken, you always want to wait for that area to be tested, right? Like I said before in the previous video, when it comes to support and resistance, it's always imperative to wait to see if there's an opportunity where this area can reject, or is this going to be an area where I can look for potential setups. So for this instance, right? For this instance, the technique is, okay, I'm looking for bearish opportunities. I'm looking for the market to sell. Why? Because we had an area of support, just was this, right? Based off of these wicks and everything like that. We had a very strong impulsive candle that broke through these floors, that broke through the floor. But guess what it hasn't done? It hasn't come back and found its way to retest this level to truly confirm to the trader, was that really a level of support, or is that going to be a new area of resistance? We don't know just yet. So, ladies and gentlemen, something that you guys can realize is say, okay, we understand that this level was broken. So something that you guys could do, something that you guys can utilize or something like that, is now you guys can get to your price labeling tool and you guys can mark off this price. Okay, Aaron, or whatever you guys are watching this video, what price do I want to wait for gold to come to before I react to it? And just a little bit of free game for you guys when it comes to gold. Gold is very favorable to whole numbers, zeros and fives. Okay, very, very favorable to zeros and fives. Like I said, yes, we are drawing a zone, but this price labeling tool at least gives us gives our eyes a target or where we can look for opportunities to execute a higher probable setup in the market. Now, so you guys can see here, just a very simple break and retest technique. We have a level of support that was broken, and then we are waiting for the market to come back to this level and retest, meaning come back to price and test if this level is actually something that is secure. Now, you guys can notice that gold did take its time to do so, but did it take some time? Absolutely, right? So the level was broken all the way back on Tuesday the 20th, which was yesterday. So it took its time. This was at, if you have your time free side, this was at 10 p.m. Eastern Standard Time when this happened. 10 a.m. Eastern, right? And by the time it came back to this level, it retested it again. It was already 8:15, 8:30 at night, right? So that's 8 hours of patience that you might have to wait on it. Or if you had this level support at the bottom, and let's say you wanted to buy gold right at that level support, okay, you got yourself a nice 200 pip move from 2,500 all the way to 2,520. Let's label this level, right? We can label this one as 2,500. All right, cool. So we know that price came to 2,500, rejected it and bought up, and then now we have a range, right? Now you guys have a range to see where gold is consolidating, right? So right now, notice how gold is not really trending like we talked about in the previous videos. You're starting to see that the market is moving sideways, right? By what we've done is we've drawn ourselves a range of where gold can be. And just like in the previous video, we talked about, okay, it's better for you to take a trade when you're on the beach versus when you're in the middle of the ocean. That's all I'm doing, right? I'm allowing the market to come to me, and then I'll be able to execute a proper setup because I am now at the beach. So for a great example for this setup, and you can kind of almost play ping pong if it gets really down to that. You guys can literally play ping pong with trading, right? Like I said, levels don't have to be perfect, but you start to see these rhythmic patterns, these symbiotic relationships that the market will have, and you'll start to recognize these things on anything, stock options, whatever. Find the patterns, exploit those patterns, and find yourself an opportunity to get in the game. So, for example, on this trade. So, I was looking for a sell on gold, right? We have this level of support that was broken. You guys can see by the wicks, right? 30-minute time frame is a little bit cleaner. But I said, okay, 25.20 is a really good level for me. I want to go ahead. I have this level was broken. These wicks played off this level, got some wicks on the lower time frame. So I'm gonna look for price to come to this zone. Now, okay, you now ask yourself, oh, Aaron, what is going to be your confirmation on when it's time to go ahead and get in? Of course, let me teach you guys strategy tomorrow, but this, for the sake of you practicing executing trades, something that you guys can do is now, which is going to be very important for you to remember, candlestick closures. Okay, candlestick closures is a good way for you to differentiate. Okay, is this a setup that I can want to get into? Is this actually level support resistance? Am I going to be faked out in the market? So when we saw a price go up to this level for gold here, and I saw a price reject 520, 25.20. Now I see it on the 30-minute time frame, and I'm looking at this candlestick. I said, okay, price is entering that zone. Okay, I'm looking to see if this is something that's going to hold. So you have two options at this point, and this is, like you said, you're diversifying your trading. You can find a way to get unique to this, right? So number one, you can either wait for this for a 1 to 2 candle, or you can wait for a candlestick to close below this level. Why would you want to wait for a candlestick to close below this level? Because remember we talked about in video number 1, well, in one of the videos, and I had that notebook and that pencil, and I was drawing how the market can break through a plane and then drop right back through it and fake you out as a trader. This is what I mean by that. Waiting for proper candlesticks to close can give you the opportunity to really inform that, okay, are we at a level that we want to play off of? So for this example here, what I actually was, legitimately waiting for was that price came back to this level and wanted to test it, which it did. It tested it. And now we have this big red candlestick that caused a rejection. That is a telltale sign to me in my head. Okay, we found the level of resistance because there was a very sharp turnaround from that level. Was this a signal for me to get in? Not quite exactly, but it gave me confirmation that we are possibly at a level of resistance. So now my goal is to be a little bit patient, see how the market's going to react, right? Is the market going to continue to buy up in this range, or is it going to go ahead and drop? So something that you guys did, something that you can do, I actually took a light setup right here. I actually took a light setup right once this candlestick closed. So was I sitting in drawdown? Absolutely, I was sitting in drawdown. But now, because I'm in this sell, this is where we talk about proper risk management and looking for proper stop losses and take profits. So by me waiting for this red candlestick to close, and let's go ahead and draw this arrow so I can tell you for those who are watching. So, and like I said, this works for me. So this is something that's worked for me for a while, and this is something that you guys can pick up and practice on your own, right? So we had this red candlestick closed below the zone. That allowed me to get an entry because I said, okay, we found a level of resistance. It didn't close above it. We have a sharp rejection. I'm going to go ahead and take a light entry here. This is where you guys can go ahead and utilize your short position tool. Now, remember we talked about taking a better trade from the beach? I allow for the trade to come to the beach. Let's see, I let it react from the level first. Was it going to continue going up? It wasn't going to continue going down. I waited for the rejection, and then I took myself an entry. Because now I said, okay, this is what's going to allow me to see, okay, I got myself a level of resistance. It doesn't look like gold is going to break through the zone. Okay, great. Now, this is where you guys can use your short position tool. So I took my short position tool, and I said, okay, what am I willing to risk on the trade? We'll talk about a strategy with that tomorrow. But with that being said, I found myself an entry. And then I'm actually going to, we talked about, this is where we're going to talk about stop loss placement. So we know we got an entry right here, but now your next question is, yo, Aaron, where would you set a stop loss? So something you guys can do, if you're taking notes, there's a couple ways you guys can set a stop loss. You can look for a previous order block. You can look for a fair value gap, or you can just look at previous market structure, a higher high or higher low or a wick of some kind. So I might be asking myself, yo, Aaron, man, what are you thinking about getting this trade? It's actually kind of funny. This was the candlestick that I actually got into. So my entry was actually up here. My entry was actually right in here after this candlestick because I had market closed in and it rejected. I was like, okay, we got ourselves a rejection. Let me go ahead and take a setup here. I got my short position tool. Now you're like, okay, Aaron, where could I possibly place a stop loss? Well, I'm going to utilize structure as my best opportunity. So there's a couple places that you can place it, and always understand your capital before placing stop losses. right? The biggest thing about trading is you do not want to risk more than you do not want to risk more than you're willing to lose. Everybody wants to make money. I completely understand that. That's perfectly fine. But in the game of trading, you want to talk about risk avoidance, risk adherence. That is one of the things you have to pay attention to when it comes to trading. Managing your risk is going to give you the longevity to keep trading. Traders fail in the beginning is because once they lose capital, they don't have the capital to rebound themselves. Like I said in the very beginning when I talked about mindset, I said the reason why people give up on their dreams is not because they don't want to give up on them. It's because they simply don't have the capital to keep going. Okay, so you're a trader. You want to make sure you want to get this right. You want to pay attention. This is about protecting your capital. Okay, high probability setups protect your capital. So this was the candlestick that I entered off of after the close. And so now I'm thinking, okay, where am I going to put my stop loss? You have a couple more choices. Trust your analysis. Let's say you got yourself a nice support and resistance zone. Set yourself a stop loss somewhere above that zone. If you're selling, set your stop loss above resistance. And if you're buying, set your stop loss below support. That's a very basic, easy way for you to start practicing placing your stop losses. Because here's the thing, you're only going to get better at placing them the more you get into marketing you trade. So I implore to you, if you're going to want to get better at stop losses and take profits, you got to get used to getting in the game. And that's why you guys can definitely utilize your demo accounts. But I will tell you this, at some point, you got to get off the demo and you got to get on a live account. You got to live fund your account. All right, live fund your account so you can be able to handle your emotions. So this is something that you guys can utilize, right? You can set your stop loss right above a level of support that you see that the market has come to before. And so we'll adjust this tool here. We're roughly risking 40 pips on the setup. That's not bad. That's not bad at all. Risking 40 pips. And then what I like to utilize is I like to trade from beach to beach or zone to zone, because the market is always going to find, the market doesn't just randomly go anywhere. Right, I want you guys to eliminate it in your head like, oh man, the market just does what it wants to do and we just got to follow it. Not quite exactly. The market itself is the market itself is very, very, very peculiar of what it wants to do. Right? It's gonna want to go somewhere, right? It's not just gonna pick a spot. Remember, we're talking about conversations that happen behind the scenes. This is something you got to pay attention to. They're always talking to you. They're okay, where do we want price to go? What do we want to do? So look at your level of support that you drew previously. Now you're at an area of resistance. Go ahead and take the trade to that next level of support. Or if you're at a level of support, go ahead and take the trade to the next area of resistance. That's okay. And along the way, secure your gains. Well, we'll talk about that in the strategy. Secure your gains along the way. When we talk about profit maximization and stuff like that, secure your gains along the way. So let's say you took the setup, you placed a stop loss at this level, which was above the support that you drew. You got yourself about 40 pips with the risk for a take profit of 153 pips. Just like that, ladies and gentlemen, you do got yourself a 3-to-1 risk to ratio trade, which on the internet, everybody loves, right? You want to have a higher reward than your risk. That's great. That's fine. So, but let's say you're like, okay, you know what, Aaron, that looks a little bit tight. I have anxiety. That's perfectly fine. Something that you guys can utilize, and this is what I do. So after you guys see a big impulsive move such as this, a good area of a stop loss that you can also utilize in the game of trading is set your stop loss above the candlestick that started the impulsive move. So you guys see this big break move. Let's go on a 1 hour time frame. I'll show you guys what I mean. So you guys can tell that this candlestick right here was really the key factor in all this that kicked this whole thing off. And remember, when it comes to trends, when it comes to just basic trend trading, right? When you have there's 3 phases of the market. And in a trending market, you got 3 phases. You have the impulsive phase, where it's the big impulsive movement in either direction. You have a retracement phase where the market is going to want to pull back because it doesn't go up forever. It has to pull back on itself. It's kind of like a spring. Okay, for it to go farther forward, you got to go ahead and pull back that spring and then make that spring compress, and there's a lot of pressure. So by the time you release one side of the spring, it's going to explode out of your hand. The market does something very similar. You have a big impulsive move, right? You have a big, let me see where's my arrow right here. So just for the sake of this example, right? Let's say you have this big impulsive sell to the downside. Then you got to have a retracement, a pullback. And now what we're doing is catching an entry off the pullback. How do we know where the pullback is to go? Support and resistance. Every impulsive move breaks a level of structure somewhere. Take note on that. Every impulsive move in the market will break some kind of support and resistance somewhere. You just got to know where that level is and what the market is going to do. So now you see it broke this level, it completely broke it, and then it went and retested it. It didn't close above it, right? There wasn't a candlestick that closed above. It rejected and closed below it. I took myself an entry, and then I took the sell, right? So remember we talked about how do we know what kind of trades we're going to take, buys and sells? Here's an example. Here's exactly what I mean. If you're in an uptrending market, and see if I can get a path going here. If you guys are in an uptrending market, you're going to be looking for buying opportunity, right? The trend is your friend. Look for buying opportunities, right? If you're swing trading it, look for buying opportunities. It doesn't matter what time frame you are. The market is always trending in some kind of shape or fashion. So just like how we always talked about, let me see if I can draw another path. I don't know if it's going to allow me to. Yeah, it will. Right? So remember we talked about support and resistance, stuff like that. We're like, okay, the market's going to do. So in this example here, we're talking about an uptrending market. We have our impulsive move here. We got a retracement. And then the next impulsive move, what did it do? It broke this level of structure that was placed on it. So it broke this high, just like you guys can probably see it on the line chart. It broke this high, this resistance. It broke it. It returned. It rejected it. And then the next impulsive move broke through that level of resistance. And so now all we're waiting for is the market to come back to this level and establish if it's an area of support for the uptrend. And so now that we have a confirmed, established level of support for the uptrend, I'm now going to start looking for entries. And just like I said, where would I place my stop loss? Below structure. So if you're in a buying opportunity, you go ahead and take an entry just like here, and you guys can place your stop loss right down here below the previous structure, right here. So you guys can place a stop loss below this level, right? If you want to, you give it a little bit of breathing room, give it some pips. So place it a little bit lower, right? So you can allow the market to pull back, right? And when you guys first get into a trade, you're never blue. You're never in the profit the moment you get into a trade. You're never in profit the moment you enter a trade. The trade will always enter red first on your phone. It'll just be red. It's okay. But we just have to understand that if I'm going to be starting in drawdown, I need to give myself the best opportune chance to be in position to where I can handle said drawdown and don't, blow my account. All right. So with that being said, price comes down to the zone to this level. I wait for some kind of candlestick confirmation, which we'll talk about on the actual strategy itself. Then we have a level of support, just like this. And then we can go ahead and take off to the moon and continue to trend upwards and take profit from there. That's if this level holds. Now, of course, there are times where the trend will flip on you, right? This is still trending stuff, but check this out. You be like, Aaron, man, but what's going to happen if there's something else that changes? That it happens. So let's say the market buys up, rejects, continues, comes back to this level of what? Previous resistance, which is here. You're like, okay, Aaron, I'm looking for a setup. I don't know what I'm looking for a setup. I'm thinking what it's going to do. But let's say this level doesn't hold. Let's say it doesn't hold. And then you have the market do something like this. It'll break it. It'll completely break it. So now you have this big sell. You're like, you've been buying for a while. And now you have this big sell that completely disregards previous structure. You're like, oh, I thought we were in an uptrend, Aaron. What's going on? Well, it looks like they broke those previous levels of structure. Now you flip into your mindset of, okay, are we going to continue to buy? Or do I need to start switching my bias because of what the market is providing for me? This is a big lesson I'll tell traders. Do not trade what you want to see. Trade what is given to you. Do not trade what you want the market to do. Trade what is given to you. So that's what I mean. Once again, that's what I mean by letting the market come to you. Let the market develop itself. So with that example, it bought up, it broke down, it bought up. And you're like, okay, let me see if this level support holds. And it didn't. It completely broke through that level. And now what you can do is two things. Once again, is the market going to come up to this level of previous support that's now going to act as new resistance? Let me get my tool here. Is the market going to come to this level and act as a new level of resistance because we broke that area of previous support? Or is the market going to do something like this, where it can fake us all out, it can come right back in the zone, play around, and then continue buying, and then test, and then continue to buy? Or it can do something like this, where the market can come up, play around in the zone, and sell. This is where it's all about letting the market do it. But if you get better at marking off support and resistance, you guys can be able to identify these opportunities in the market more and more often. So just like in gold, with this great example here, we have a moment of that right in our faces. So let me go ahead and delete this stuff. This is what I mean. All right. So gold in and of itself was sitting in an uptrend, which is perfectly fine. Right? What are we doing here? What we're looking for, like we talked about, we have this. Let's just duplicate this here on the chart. And I'm going to see if I drop down a lower time frame, see if we can see it a little bit better. Oh, this is great. This is awesome. Check this out. Watch how this chart and stuff lines up a little bit. So remember we talked about in the drawing, you had the impulsive move up, you had the retracement, then you had another impulsive move, and then you have a big, huge impulsive move breaking these levels of structure. That's exactly what gold did in this little itty bitty area right here. I'm going to zoom in on it and see what we're talking about. So notice this, right? You had price break a level of support, right? Resistance, created new bound support, retested and bought up, right? So now we know we have this level of support, but look what the market did. It completely crashed, breaking this level of support and resistance that was left right here. So you have the market come to this, broke this level of support right here, formed a resistance or a higher high, pulled back, creating a higher low to continue the uptrend. Perfectly fine. But then all of a sudden, we're like, okay, we have a new high. And I'm going to delete some of these drawings real quick here. See if I can trash this. Nah, it won't. I'm going to be more peculiar. So now I'm going to mark off a little bit some lines here so you guys can see what I'm talking about. So you know how you guys can see there's a whole bunch of buys and sells candles that are going on. So look what happened when price broke through this level of resistance here. And we've identified this on the lower time frame, but just for, marking it up. Broke up, retested, and continued. Remember, there's a high right here, so we can take our circular tool. There was a high that was formed right here, meaning that it retraced. And you see that this high was broken as it continued going up with this candlestick right here and retesting it. So I can visualize in my head, I said, okay, this might be an area of interest that I need to pay attention to in the event that if I want to look for some more buy opportunities, if I want to get a trade idea, create myself a setup, I can be able to recognize, okay, I found a high and that high became resistance. So let me see if I can draw a mini zone here just to train my eyes to see what might be happening next. So just like how I drew this line above this setup, a high was formed right here. So watch how it almost like looks exactly the same. So let me draw some circles for you guys so you guys can see what I'm talking about. Ooh, even better. Not even circles. Let's number it. Let's do some numbers. And so I can just show you what I mean, because this happens all over the market all the time. So let's mark this number 1. We'll mark this area number 1, just like that. Number 1. And if you guys know this, it's called Elliott waves. So number 2, just like this. So we'll go here. We'll mark this number 2. And then we'll mark this down here, number 3. Just like that. And then we'll mark this level 4 up here at this high. We'll go level 4. Just like that. And then this bottom arrow, I'll move it over here a little bit so you guys can kind of see if you guys can follow along. So there's 1, there's 2, there's 3, there's 4, right? You need really 4 points to determine a trend. Impulse, correction, continuation. That identifies a trend right there. Those 4 moves will automatically determine a trend. Now, point number 5 is where you want to go ahead and point number 5 is where you're going to start looking for entries. But this is where you guys don't want to get faked out, where a lot of people will understand. For the level of number 5 to work, the market will need to stay above the resistance of number 2. So for number 5 to work properly, the market needs to come back to this level that's perpendicular to number 2 and stay above it for us to continue a trade towards the upside, right? So you want to be able to make sure that number 5 stays above. But for the sake of this example, what do you do if level 2 gets broken and level 3 gets broken? So not only did resistance gets broken, the support that was formed on this lower low was also broken. Let's draw a zone. So now not only one zone was broken, but 2 zones were broken immediately. So now you're like, oh my gosh, like, okay, what do I do now? Like I said earlier, want to find if these levels were truly broken, wait for a retest. So let's look at gold exactly in this moment. Okay, let's look at gold exactly in this moment. Let's draw it out. Let's draw out the points so you guys can see what I'm talking about here. So let's label number 1, which is always the beginning of the impulsive move. That's always going to be level 1. Label 1 is always the beginning of the move. Number 2 is always the point of resistance. Number 3 is the new bound support. And number 4 is the continuation. So let's look at this tiny little example here that happened on the 15-minute time frame. So we'll label this number 1 for the example. We'll label this 1 right here. And now now there's that impulsive move. You guys can kind of see it a little bit. Very aggressive bullish candles moving to the upside. Then we found a high point. We can level this number 2 or an area of resistance. Now we have our level 2, right? Then we have to have a pullback to make sure support is held. That will be our level 3, which would look like this. Something like that. It pulled back. Now we can label this piece number 3 right in here. So we'll go number 3. Got our level 3 right there. And then we found our level 4 once we continued into the upper direction. Now we have our level 4, which is this new bound high right here. So it almost looks like very identical to what we drew with the lines over here, as you guys can see, right? It looks very, very close. 1, 2, 3, 4. 1, 2, 3, 4. Very looks like the same. So if that makes sense, you just drop a 7 in the chat or comments. Hope that makes sense for you guys. So let's continue moving forward. Now we need to find out, okay, where is my step number 5? Where can I now look for opportunities to get in? But notice how the market crashed between these lows, just like what it did here. It crashed between these lows. It completely disregarded level 2 and level 3, completely sold back down to that beach that we talked about in the previous video. The market completely broke those levels of structure. So now, yo, Aaron, man, what am I going to do? Well, like we talked about in the previous videos, you need to wait to see what the market does. So what did I do? I allowed the market to retrace on itself and establish a possible 0.5 for me to get in, or a 0.6 if you wanted to label it, however you want to do it. I needed to wait for the market to retrace to these levels that it previously broken, because once again, is the market going to continue buying in that same direction, or is it going to stop and reverse? So for me, that's all I did. I just waited. So we knew that this big red candlestick was our big impulsive move that broke the previous levels of structure. Now I'm just going to wait for a retest of that structure. And just like we did, we allowed the market to pull back to this level of structure. It took 8 hours to do so, but sometimes in trading, it's all about patience. Let the market come to you, right? Let the market come to you. Execute your trades on the beach, not in the middle of the ocean. So now we let the market come back to us, which is perpendicular to level 3. Now that level to perfect level 3, I'm gonna wait for a bearish candlestick because I'm looking for sells, right? Now I'm gonna be looking for sell ideas because the previous structure was broken. We were once buying, and in structure, then the candlesticks told us, okay, the buying momentum has slowed down. The sellers are now in the game, right? It's kind of like the Broncos are winning the game, and then all of a sudden the Raiders want to come back in the fourth quarter and take over, right? If you're thinking sports. So now those levels of structure have been broken. I'm going to wait for the test and see if it holds. And all I'm looking for is a bearish candlestick to confirm that we found a level of resistance. Okay. We have these 3 bullish candles up, and then it closed below the level. We have a bearish candle that dropped and closed below that level. That was my indication right there. All right, Aaron, we found resistance. I was looking for sells anyway. That was my bias. Okay, I'm going to go ahead and take a setup at the close of this candle. Now, why would I wait for the close of the candle? Because let's say, for example, you guys might run into a situation where you're like, oh man, this candlestick is going to buy. But then when the candlestick finally finished forming after the 15 minutes, it left a huge ginormous wick and it closed below your support and resistance. A beginner trader would see a buying candle and go ahead and buy in and then wonder, wow, I just got stopped out by the banks. Well, Aaron, why did my trade hit stop loss? It's because you did not allow for the candlestick to close completely. That's why sometimes look at all these wicks, guys. These are fake outs. These are traps. You don't want to fall into the trap in the market. Allow for the candlestick to fully close. That can give you a higher probable chance of profitability. Are you going to win the trade? Not all the time, but at least you have a high probable chance using proper risk management. All right. So I waited for this candlestick right here to close below. I entered in at the opening of the very next one, which was 25.17. Now I'm looking to myself, okay, I'm looking for a sell opportunity. Where can I place some areas of stop losses that adhere to my risk tolerance? Like I said before, you only want to risk what you're willing to lose. You don't need to overtrade or over leverage. Okay. So you have a couple ways you could have set a stop loss for the setup. Like I talked about, you could just set it right above that level that you drew. Something like that. And we'll make this red for our stop loss. You could have set it right above. Maybe you want a tight stop loss. Maybe you don't want to risk a lot. That's perfectly fine. Maybe you have a little bit more capital in your bank account and you know that level 2 is up here. Let's say you want to set your stop loss above that number 2 point. That's also a good area where you could put it, right? So make sure you understand what you're willing to risk and then go ahead and get yourself a setup. That's where you have your stop loss placed. And then guys, the easiest thing for you to take profits, just take the trade to the next level. Whatever zone of support and resistance that you drew, just take it to the next level. Especially for gold. Gold is very favorable to support and resistance. Like it moves really, very well with support and resistance. And it was so funny. Every single asset in the currency market, stock markets, crypto markets, all love support and resistance. We can do the same thing with NAS, US 30, Dow Jones, QQQ, SPY. It doesn't matter what you trade. Trade is support and resistance. You find yourself an entry point, set your stop loss below or above, previous structure, and then take the trade to the next level of structure. So for this sell idea, it would make easy sense for me to go, okay, I'm going to go ahead and take this trade and I'm going to set my take profit right at 2,500. Now, why would I say 2,500? Remember we talked about in the previous videos that you can use prior history to determine an entry or a level that you want to play off of? Where has the market been before? The market's been at 2,500 beforehand. So you don't have to guess. You don't need to guess. Let the market tell you where it's been before. Oh, green flag. We talked about red flags versus green flags. There's a green flag. Looks like the market has been here before. So it's probably going to do what? Go right back down to that level. Of course, there's no certainties in trading. All right, I'm not going to sit here and tell you like this is always going to work 1,000%. No, that's not what I'm going to tell you. But what I am telling you is if you want a sense of practice and allowing to see what the market can do and you can get better at what you're trading, find an area of support and resistance, take a trade at support, take a trade at resistance, and see what the market does. If it goes to that level, take note, journal it, write it down. It's like, okay, it's been successful. Let's see if it does it again. Let's see if it does it again. And now get you what you're building. You're building a confirmation checklist for yourself and you're building confidence in your edge. Because at the end of the day, no one's pushing a buy or sell button but you. So we check this out. Now we have market came to this level of resistance. I got my entry point here. I set my stop loss right above or above level 2. I took my short position tool, placed it here. I noticed I either could have had a 40 pip stop loss for 170 pip TP, 75 pip TP, or I could have had a stop loss of 80 pips with a 170 pip TP. So pick your poison. Do you want a 4-to-1 risk to ratio trade, or do you want a 2-to-1 risk to ratio trade? Doesn't matter. You're still risking less than what you're going to gain. All right, so I really hope that makes sense in your analysis and you guys are practicing these entries and stuff like that. We're gonna go to, I'm gonna pick a random pair. I don't care what it is. I'm gonna actually trade an indice for you guys today. Because I love gold a lot and I can give you guys many examples here, but sometimes you might need to see it in different markets for it to make sense. So this is a great example. Got yourself a sell opportunity. Yeah, were you in the red a little bit? Of course, it happens. Like I said before, you're not, anytime you take a trade, you are not going to start out in the profit, especially in trading. You're going to be in red a little bit. It's okay. You're going to sit in drawdown. Get used to it. The drawdown happens. And then so the market came down to our level and played off. All right. So and then as you guys are seeing right here, look at the live example of gold. Look what gold is doing right now. Right? It's coming down to trying to find maybe an area of resistance or support for where we can find an opportunity to trade. So we'll take it to the 1 hour time frame, see what I mean here. Now, what could I do? What could I do? We know that this is a level of support at 2,500. We've seen that the market has come to where price is at before. Why? Because there was a bullish candlestick in a previous red one. So you might be able to draw yourself a zone right here. Measure it out with the measurement of this candlestick and draw it across. Something like that. Now, well, Aaron, how do you know that's a good level? Take your zone that you drew and go in the past. Ask yourself this question. What we talked about in the support and resistance video? Find confirmations that price has been there before. So how many times has price been here before? Here's 1, here's 2, here's 3, here's 4, here's 5, and yes, wicks count 6, 7, 8 times. Price has been here before. So guess what you can do now? Allow the market to react. Allow the market to tell you, okay, is this level truly an area of support and resistance? Or are we looking for price to fall below? And here's what you can do to know. So there's a couple plays that and I'm going to give you guys these plays right now. Couple plays you guys can do for gold literally today. Let's say if the market wants to decide to not close below the zone, and let's say it decides to consolidate, stay above the zone and buy up, you got yourself a buying opportunity. Or let's say the market decides to crash below the zone, retest, and drop. There's only 2 things that gold is going to do tonight. It's either going to respect this level support and buy up to the next zone of possibly where? Right up here, like it has been before. It could. Or is the market going to drop and collapse and find a level of support? And once I said again, you want to be careful of, you want to look for candlestick closures. So right now, this candlestick still has another 14 minutes to form. For me to confirm to myself, okay, this thing might be ready to buy. It looks like this area is area of support. What I'm going to be looking for, ladies and gentlemen, is I'm going to be looking for some kind of bullish candlestick, a green candlestick, to close above this level, something like this. And see, now we can change the opacity, something like that. I might need to look for a bullish candlestick to close above this price before I can take a setup. And so let's say the next hour candle next hour candle closes above this level. I said, okay, great. I'm going to take a buy opportunity. Where am I going to set my stop loss? Below structure. Where could you place it? Pick some. You can look at these wicks down here, put price below these wicks. That's one way. You can pick right below the zone that you drew. That's another way. You have options. Once again, risk to reward, right? What makes sense to you because of your capital? If you don't have a lot of capital, sometimes a tighter stop loss is going to be your best friend. Why? Because you don't have the capital to allow for the wiggle room of the market to fluctuate. It's going to move up and down. And so sometimes having better capital is better for you. Why? Because now you can allow the trade to breathe and allow it to do what it needs to do if it's going to buy or sell. Okay? So price came down to this level of support just like this. If it rejects and closes above, I'll take a trade for the buy, ride it right back to the next beach. Don't need to guess where it might go. I'll take profit right in the next beach, which would be 25.20. Why do I like the level? It's been there before. It's been there before. And tomorrow we talk about, the trade, and then we talk about maximizing profits. I'll show you guys techniques on how you guys can take profit along the way, because you can never go broke taking profit, right? In the world of investing, you can never go broke taking profit. So it's okay. Take some bread out the market. Take some bread out the market, because at any time the market can easily just take you out. So that's the name of the game. Or let's say we don't have a green candlestick close, close above this level, and we have something where, just like we had in this example, right? 1, 2, 3. So we have that 1, 2, 3, 4, and then we had that possible 5. What if we have another instance of like that right here when it comes to these candlesticks? Let's see if we can drop down to 30 minutes, see if we get a little bit something more. There we go. This is excellent. Perfect, perfect, perfect. So check this out. And we were kind of accurate. Look at these. Look at the zone, man. Pretty accurate, ain't it? Anyway, hey, in the world of trading, I'm going to tell you something, man. I'm going to tell you something so well. Find a way to have fun with this thing, man. Trading is not that serious. Have some fun. I know people online will make trading this big serious thing. It's okay to have fun. Make it unique for yourself. Have fun, laugh. It's all about you. It's your journey. It's your growth, man. Don't let anybody steal your shine when you're learning how to trade, all right? Have some fun with it. Make it unique to yourself. So just like something like this, right? We have that first initial move. So we have that 1. We have that 1, 2, 3. So we have that 1, 2, 3, 4. Now we're looking for that 5. 5 pull back to this level. You could have taken a trade here, caught yourself maybe 20 pips if you wanted to. Or now we have a situation where price can easily crash below this level. Something like this. Price can easily do something like this, right? Can easily break through this floor, retest this level, and drop. Maybe support like this and continue to trend. And then continue its downward movement to the downside. Something like this. Could it happen? Absolutely. Could the market break this level and then fake us out and then go right back to the zone and buy? Absolutely it can. How do we know it's going to do that? I always look for candlestick closures. The candlesticks will tell you everything. Like I said in the very beginning, like in the beginning of the boot camp. A candlestick is just the visual representation of price manipulation over a given time. It's telling you, the market is going to tell you what it want to do. Let the candlestick print. Be patient. Be patient. Let the candlestick print. Wait for it to be done. You don't got to be overzealous in the beginning. You'll get better, and you'll start finding sniper entries and all that kind of stuff. But in the beginning, man, just let the candlestick do its thing. Let it wait. Hang on. Let it do what it got to do. Stay patient. All right. So that's what we're looking for. So these are my potential plays for gold. So I'll draw all the ideas I got for gold right here. We can easily get something where price can just consolidate in this area, just like this, and then buy. We'll do like that. We can have the market drop below the zone, retest, break, and sell. The market can break a back above, buy and back above. So right now I don't have, these are the 3 different options for gold that we can do at the moment. But once again, guys, it's all about that patience, all about utilizing it here. So I hope you guys have been able to join this quick little call just to reiterate now, talk about entries and stop loss placements and take profit placements. So hope everybody, enjoyed this, man. Drop a 1. I know we're on Zoom here, but go ahead and drop a 1 or drop a 7 in the chat if that makes sense. On a basic tip. I know it wasn't super advanced, but at its basic form. Hope that makes sense to somebody if you're watching this video. Okay? At its basic sense. Now, let's do a live example. Let's go to Bitcoin. Let's just look at Bitcoin. Same exact deal. Same exact deal with Bitcoin. Well, brand new. I don't even trade Bitcoin daily. I don't even trade Bitcoin daily like that. Now, check this out. Remember we talked about, again, that 1, 2, 3, 4, 5? And see if a level really supports it or something like that? Watch this. This is a fresh markup, fresh from the very beginning. What am I going to do? Step number 1, I'm going to identify the trend. What trend am I in Bitcoin at the moment? How do I figure that out? Go to the line chart. Looks like we're a little bit in the uptrend on the 1 hour. Of course, when you zoom out, we're really in consolidation. But for the sake of this right here, you look at these previous past movements. It looks like from Thursday to 15th all the way to today, we've been going up on Bitcoin. We've been going up. So for this one, I'm going to be looking for more buying opportunities than sells for Bitcoin. All right. So let's do this. Get my candlesticks back. Okay, I need to mark myself my higher highs and my higher lows just to see if I need to find myself an opportunity. But look, similar to gold, we have a situation where we had that what? That impulsive movement with a retest and a break. And remember I talked to you guys that sometimes it might not respect that level. It may not even come to that level and just break above, similar to what I drew up here. Look at Bitcoin. Look at Bitcoin. Great example of what this can happen. Watch this. What do we have? What? And I'll see if I go to a lower time frame. Prove the point. So check this out, right? Here's our 1. There's 1. There's the 2, 3, 4. What do we have? Huge 5. Let's mark off those levels really quickly. I like doing the hour 1. Hour 1 is so pretty. The hour 1 has a very, very pretty structure, to be honest. Depending on what you trade, though, of course. Everybody's analysis is different, but of course, I personally liked the hour time frame. I don't know why. I kind of like married it. The hour time frame has just been something really good for me. So I'm gonna go ahead and draw out this level here. Pretty similar to this candlestick, right? We found ourselves in the good little order block. Why? Because we had that big impulsive candle with a quick reversal here. So we got ourselves an area of resistance that's been confirmed like this with that break test. So I'll draw that zone across, something like that. So now what do we have? Remember, here's our 1, 2, 3, 4. But now notice how price, you guys could look what it is. 4, you could have taken entry right here. Why? Because this candlestick closed above it. You could have taken this trade, cut yourself some pips if you wanted to. But you guys can see what I mean by the break, retest, continuation. It did it here temporarily. That's fine. Did it continue up? No. But just for the sake of recognizing that it happens in the market, break, retest, continuation. Just like a trending market. But now look what happened. We had a similar situation to gold. There's a huge sell-off. It broke levels of support. Drag this line across. There's an area of interest for you. Now, some of us might be like, oh man, oh, look at prices bought up to this level, rejected. Okay, I'm gonna take this sell. But was that truly support? Was that truly resistance? No. Why? Because look at all the way up here. So did this candlestick come all the way back up here to test that level? No, it didn't. So to save yourself the headache, you might not need to take a trade right there. You might not need to. Because yeah, it could have been cool. You caught this, nice little smooth little trade, but did you get a higher opportunity? No. Are you still in the middle of the ocean? Absolutely, you are. Still in the middle of the ocean a little bit. So I wouldn't take that. I'll be like, no, you know what? That's not strong enough for me. I want it to really come to a point where I know that it's been there before in the past that I could previously see. Let's say this is only all you saw. It's cool. So let's say for the beginner right here, now what are we going to look for? What are we going to possibly look for? And the cool thing is, why would I not take a trade here? Because guys, the market didn't come up to the zone and reject like previously gold. It bought and broke through it completely and continued. But now guess what we have? We have a potential area of support for this continuation of the buy, just like how I drew a little bit earlier, right? There's few movements in the market that determine an uptrend, impulse, correction, continuation, just like that. So what do you guys think we might be waiting for? Let's allow for price to come back to a level that we know it's been there before, like 6,500. That might be, and then guess what you can do? Take your label, get off. So let's go ahead and do the coordinates. Mark it off. Leave yourself a price label for you. See if we can do this. Set yourself an alert. Be like, okay, I'm gonna wait for price. I'm gonna wait for Bitcoin to come back to 6,500 before I execute. Does that mean you're gonna get in the trade? No, you still need your confirmations. You still need to make sure that things are gonna move the way you need to. But at least you gave your eyes something to look forward to. And then you just sit on your hands. Let the market come to you. On the beginner side. If you're a little bit more advanced, and let's say you went a little bit further in the past to get more data, now you guys can see like, okay, Bitcoin has been here before at this level that rejected. So you guys can see how price came here before. It's been there. So you can almost draw yourself a nice little zone. Either use like this candlestick, but I always like to use a red candlestick that's a lot smaller. So I like to use this one. Draw this across, something like that. And we'll draw the zone over to the past a little bit. The candlestick we're using to utilize the support resistance is this one right here. All right, we're utilizing this candle. I always like to have my zones like 10 to 15 pips big. I don't like my zones to be really big. So I found myself a candlestick that can represent resistance and support really well. And this candlestick really did well. Why? Because look at the market in the past. Price has been into the zone, wicked before, came up, wicked. It faked all the people out and dropped below again. It came up here, resisted and rejected prices. So I think we found ourselves a pretty decent level. And now, even in today's time, we can confirm that, okay, yeah, that's a really good level. How do we know that? Market came up to the zone, and what did it do? It rejected. Did it not? Came up, rejected. Oh, snap. We might have a good area of resistance. Here's where you guys could have gotten faking out, right? Remember we talked about waiting for the candlestick to close? Here's how beginner traders get stopped out. Anybody hear about, oh, they get stopped out by the brokers or the things like that? You didn't wait for the candlestick to close. So for example, let's say you had this level and you're like, oh my God, yo, Aaron, man, it broke through my level of resistance, bro. It's ready to buy. Then that very next candle took you out. You got yourself a buy entry. You set your stop loss below support because you all excited. And guess what that next hour candle did? Took you out. And then guess what it did? Bought in the direction you really wanted to do. Now you're frustrated as a trader. Now you're pissed. And I'm telling you right now, there are millions of people out there that literally quit trading because of what just happened right there. That's just manipulation of the market, man. That's just market manipulation. And what can you do? All you can do is be patient and let the market set up for itself. All right, allow it to do it. So, but once again, with a big impulsive candle like this and these levels, this was the previous structure that it broke, and this was nowhere even remotely close to what this previously broke. I might even take the setup. I might take something a little more high probable, which was wait for a price to come back up here. But notice again, right? Notice. You'd be like, yo, man, Aaron, man, okay, cool. We're going to wait. Fine, we're going to wait. Notice how the market did something a little bit crazy on you. It bought up through the zone. It completely disregarded this. It didn't even respect it. Didn't respect it. It just broke right through it and kept on going. But now, because it did something like that again, what am I going to wait for? I'm going to wait for a possible retest. So now, here's my analysis for Bitcoin. Only using support and resistance. No fancy techniques, just using support and resistance. Because we know that it's a level that it's been at before, and this price is at roughly 59,800. And by the way, Bitcoin loves zeros. It loves zeros. So if you can trade anything that ends in 00, you're golden when it comes to Bitcoin. All right, take profits, stop losses, use zeros at the end. Very, very helpful. So now we have two possible ideas. Okay, we understood we're in an uptrend. I'm looking for buying opportunities. I need to find an area of retracement. My 0.5, my number 5, I don't know where my number 5 is going to be. So I need to give myself opportunities where it could possibly happen. Is it going to happen at 6,500? Or is the market going to do something like this where it's going to break 60? Or is the market going to do something where it's going to break 6,500, pull back down to 59,800? Because we've been there before, right, with previous price action. As you can see, previous price action would support that we've been there before. Or maybe price will continue to come down to 59,800 and then continue its buyout. We don't know. But just sit on your hands. Let the market come to you. You've got two areas of interest that you can let the market react. Just wait. Just wait for the market to see what it does. Because you're in an uptrend, you're looking for buys. That can be your example. So to end off this Zoom call for today, guys, I want to just reiterate a couple things, man, when it comes to trading. So at the end of the day, everybody's bias is going to be different. My bias can be just what works for me because I have a certain amount of capital that allows me to do that. Maybe you have a bias that's more favorable to the capital that you are able to risk. That is perfectly okay to have different biases in the market. But at the end of the day, to end this call off, it doesn't matter. It doesn't matter which way it goes. All that matters is who is profitable at the end of the day. Whether you are profitable scalping your trades or you're profitable swinging your trades, it does not matter. Find something that works, but I hope this training really, really, really did help you guys. And we know that is the end of our chart markup. Tomorrow, we'll actually dive into my strategy that allows me to be profitable and profit maximization. How can you increase your profits? How can you protect your assets as you're in profit so you don't lose your profit that you've gained? And those are that for sure. And I know my guys got a question. So if you want to unmute your mic, you should be able to go ahead and unmute your mic, Brody.
Hey man, yeah, I just want to say I appreciate the knowledge. Definitely, definitely very helpful. Not a lot of people do this for free. Um, like you know yourself, I've been trading for 4 years, so I'm very well experienced. But I've got a question regarding gold. So how do you trade gold without while avoiding the commissions? You know what I mean? Like, so the spread on gold, the spread on gold is a bit too much sometimes. So
Mhm.
when I place my limit orders, sometimes with my scalping strategy, I often miss my entries a lot of the times. And I seen on your chat that you have futures on gold. So I was just wondering the broker you use to trade gold.
Okay, so something that I can utilize is let's say my broker, because you're talking about spreads and you're talking about like spreads and stuff, like how can you miss entries sometimes just because
Yeah, because of my limit orders getting missed.
they'll be always getting missed. Okay, well that's a great question. Great question. Okay, so something that I did, something that I teach my team that I mentor, is
Okay.
I do it like this. Let's say you go to your broker and you go on like your trade locker, MetaTrader 4, whatever platform you trade on, and what price does your broker have for gold? So let's say your broker might have gold at $2,000. That's what your broker says on your MetaTrader 4, MetaTrader 5, or Trade Locker. But then when you're on TradingView, the chart shows current price at 2005.
Yeah.
What does that tell you? That you are 50 pips off from what you're marking off versus what you're actually taking.
Mm-hmm.
What you're going to want to do is you want to navigate TradingView and find a broker on TradingView that's closer to what your price matches on your broker. So now when
Yeah.
you're actually marking off your levels of support and resistance in
Mm-hmm.
on your chart, it's your closest direct correlation to what your broker actually has. So then when you set your limits, you know your limits are just as closely accurate to what your broker price actually is.
Right.
That is the technique that I tell my team.
Okay.
Because I had a girl, she's trading NAS. That she almost had a 200 pip difference.
Oh yeah, on Nas is nasty with the
Yeah, NAS
spread.
is nasty, but think about it like that in a grand scale, like 200 points is a big deal.
Yeah.
So I just told her, I know on trading that you guys you can do this. So because there's not just one gold chart, right? Different brokerages have connections to TradingView, and you guys can look over here onto the right hand side.
Yeah, so I see you're using gold futures, MCX or TVC?
MCX. Because
MCX, okay.
the only reason I'm using this one is because when it comes to my broker on my trade locker, price is closely correlated.
Okay.
It doesn't mean that I have this broker. I want to make it very
Right, yeah.
it doesn't mean I have the broker. I'm just utilizing the broker's technology to allow me to trade gold. Because sometimes maybe your broker would be capital gold to capital.com. And that might be more accurate. But the one that matches my broker the most is going to be the one for futures, which is the MCX one. And I usually favorite it. And because it's the one that's, or the one over here I have, which is CFDs on gold. That one's the most accurate for me when it comes to the brokerage that I
I
utilize.
see.
Yeah. So that can help you out with missing your entries and stuff. It can just be literally that little difference can make the world. Or another technique you can do, something that I realized on my broker, I looked at my spread and I figured, and I pretty much asked my broker, hey, what's the spread for 0.01s on gold for you guys? In terms of pips. And they told me, they're like, oh, our spread is roughly like 5 pips, five pips or something like that. 5 pips, 1 pip, 2 pips. Oh, okay. So now I'd say like this, okay, if I know that my broker has a 2 pip spread and I want price to buy at 25.10 and I got a 2 pip spread, I might need to set my trade either at 25.08 or at 25.12 to really
Yeah.
make sure I get in the trade.
That's what I've been doing. That's what I've been doing. But because when you scalp, because I have a swing strategy and a scalping strategy, which I'm trying to use for my prop firm. And on the scalping strategy, it works. I've tested it. It works really well. It's just that like when you do that, when you move your entry closer than you think, and then if you lose the trade, I usually risk nothing more than 1%. So instead of losing 1%, because I'm on the 1 minute time frame, if I lose the trade, then I'm losing like maybe 1.5 or 1.6 when I do that. So it's definitely something I have to like strategize. But yeah, I think I have one more question. Do you trade your personal account or like do you have a prop firm?
I do both. So here's the technique that I utilize. So I actually when I first started trading 6 years ago in 2018, I only used my own personal brand. I actually had no knowledge of prop firms until probably 2022. Like I didn't know prop firms even
Damn.
for like I'm being so serious. I didn't know prop firms even existed because I'm in the United States. I didn't really have any trouble finding a broker here for the time
Yeah,
being. And
true.
of course, the United States, they started adding regulations and started messing it up for us. And then prop firms became really popular at the time. But in the beginning, all I had was a personal account. I had a personal, and you were able to use unregulated brokers like Hugo's Way, Trade Locker, and everything like that,
Yeah.
and stuff like that. Those were popular. And then the United States came in. A lot of them had to leave. MT4, you guys remember when MetaTrader 4, MetaTrader 5 was kicked off the App Store completely? Yeah, we're on Friday. Tune in on Friday when we talk about fundamentals. I explain how that whole thing went down. But
Yeah,
yeah,
damn, that's tough. Because in Canada, we still have it on app stores.
right. But I'll talk about why that happened here in the United States. So on Friday,
Oh,
guys, being for a treat because I will tell you guys some stuff that you probably didn't even think about. But that
damn.
happened to me. So because I'm in the United States, I have to be more creative of what I find. But anyway, so literally in the beginning, I had a personal account. So right now, I do have a personal account that I just had for years. Then I was like, you know what? Let me learn the prop firm space. And so I did. I passed two prop firms so far. One for Cortana that's based in the UK, but I had to use a VPN. And then the second one was Paradise Capital that's been growing really fast here.
Yeah.
I'm currently practicing on my other demo account for I'm currently practicing right now for 50K demo on FTMO. That's my next broker, my next funded broker I'm going to use.
But you gotta use a VPN for FCMO though, right?
No, they're very friendly in the United States.
Oh,
So
I didn't know
yeah,
that.
right. It's
Okay.
pretty cool, right? So they're friendly in the United States, but I understand that FTMO has different rules. So I just want to practice it on a separate demo that I have. And because most prop firms, their leverage is 1 to 100. So you can pick any broker, set up a demo for like 25K, 50K, 10K, 5K, match the leverage to 1 to 100. That means you're still trading with the same leverage that a prop firm would be. So now,
Right.
as I practice my strategy, if I can pass a funded account on my demo without breaking the rules, all I got to duplicate, I just got to duplicate the same thing on another one
True. True.
and go from there. So, but good
Yeah.
question. Yeah, so I do both. But what I tell my team is this: if you are low on capital, practice a strategy that works. Set up a demo account that replicates a funded account that you want to get.
Hmm.
Practice on that demo. See if you can pass the funded account without ever having to pay for one, technically, because they're not paying for it. Could you pass under your demo maybe 1 to 2 times on your own? Then go buy you a funded, do the same thing you was doing on your demo with the same leverage, go do it again, pass it, get yourself a payout, take the money from the payout, don't put it in your bank account just yet. Take that money from the payout, put it in a live trading account that's you personally own. So instead of you trading $50,000 of FTMO's money and you get a 3K payout, take that 3 bands, put
Yeah.
your own live account. Now you're trading live $3,000, not $300.
Right. Yeah, that's what I've been doing because I'm currently 100K funded on the
Nice.
5%ers. I don't know if you know the prop firm, the fifers, like one of the oldest props been around. Like,
I haven't seen that yet.
oh,
Send that to me, man, for sure.
okay. Yeah, and whenever I get a payout, I just dump it in my personal account. And it's probably one of the best strategies to grow your capital. But yeah, like I said, I really appreciate what you're doing because I joined the life and I was like, damn, this is actual pure knowledge because people be paying for this stuff, you know what I mean? Like people be paying for it. But yeah, so like nice, I like it.
Yeah, man, I appreciate that, man. Like I said in my first recording, dude, like the unfortunate thing about the trading space, just after the years I've been in this for so long, there's a lack of authenticity. And then at the
True.
same time, too, what happens in the trading space is that people are scared to show their face. right? When
Right.
you go to Twitter and stuff like that, all the big trading gurus, do they ever show their face? No, they
Not
never.
really, no.
It's a picture of like Jujutsu Kaisen or some kind of meditation dude, samurai looking dude, or like, you know what I mean? You know what
Yeah.
exactly what I'm talking about. We don't know where you are, we don't know where you're from, but yet you're now this big guru. That doesn't. I get that you're making money, but I look for integrity. I look for integrity. If you are that good, why are you scared to show your face?
That's true. And most of the times they be inventing strategies that like don't just work. Because like for me, I find that like keeping it simple like you did was what made me profitable. Because I I've been around, I looked at like different bullshits over the years, and then I finally started trading support and resistance, and that's actually what made me profitable. Simple support and resistance. And it's just like magic. And like you said, less is more. It was actually legit. So yeah.
Yeah, man. Although awesome, man. I appreciate that. That does warm my heart, man. You know, it's nice to meet you, dog. Now, honest, I love that. So I don't want to hold you guys any longer tonight. I hope, I'm glad you guys were able to tune in. It does warm my heart to be able to do this. I want to do this again next month with more people, of course. But this is all for the love of the skills. So I'll be dropping the recording for you guys, pretty quickly in the chat also as well. So tomorrow we will be diving into actually my strategy that I utilize support and resistance for. So tune in tomorrow, same time, same place. So tomorrow we'll dive into my actual strategy and profit techniques, like how to move stop loss into profit, take partials, etc. And then on Friday will be my favorite day. It's fundamentals. We'll dive into news, FOMC. We'll dive into bankings. We'll dive into all that kind of stuff, how to read the news, how to analyze the news, stuff like that. So we will dive into that on Friday as well. So I appreciate you guys. Any final questions before we head out for tonight?
I don't got any.
Awesome. Hey, Taran, you good? I know you've been working, man, catching up and stuff like that. Oh, man, awesome. So, good night, gentlemen. Have you guys a great evening. I'll drop the recording of you guys very soon, and I will see you guys tomorrow. Same time, same place. Peace.